Take the NASDAQ. If we've got one force, one economic force, we take the NASDAQ, we divide it by by Bitcoin, it's down 99.97%. So you kind of get one asset allocation only, which is crypto. In the macro world, we now think you need concentrated portfolios as opposed to diverse portfolios. In fact, diversification just destroys returns now because you've got one clear macro factor. So that's really what we're doing. And then we spend a huge amount of time working on the business cycle and the various components of all of this, how it comes together and where we are in timing of that. AI and robots are replacement humans. And we're going to have infinite at some point. So the idea is, where does we have infinite? Because that breaks the whole GDP magic formula, right? Nothing makes sense anymore. We call that point the economic singularity. And we kind of finger in the air said, probably by about 2030, because everything is going exponential in terms of speed of AI and robots, we probably have no idea what an economy looks like anymore or what it means. Everything we all look at is going to fall apart. So we kind of think we've got 5 years. So this cycle and the next cycle. And part of something Julie and I talk about between us too is like this cycle, people are starting to get it. I think once we get through a pause that refreshes, a contraction in liquidity, the cycle, I think the next cycle, everybody's going to go all in and realize it's the kind of end of times because we just don't know what's beyond that. Nobody does. And anybody who says they do is lying because we have literally no idea when you've got free intelligence, infinite intelligence, and we don't know. So I'd rather be honest with ourselves and say, right, okay, we got 5 years. That's it.
Macroeconomic investor Raoul Pal believes that the current market setup following Donald Trump's return to power closely resembles that of 2017, which could lead to a renewed surge in altcoins, with XRP being a prime example. He notes that in 2017, Trump's policies caused the US dollar to surge due to challenging financial conditions, followed by a sharp reversal that weakened the dollar. This time, the same phenomenon occurred. The dollar rallied after Trump's victory and then began to weaken. As for XRP, it has historically lagged behind Bitcoin, first consolidating and then exploding in March 2017, eventually increasing by around 69,000%. During Trump's second term, XRP increased by 580% from 50 cents to $3.40 and has been consolidating since February. This phase is expected to last 6 months, the same length as the previous one. Looking at historical data, XRP is famous or infamous for its sharp rises when the market heats up. If the pattern described by Paul repeats itself, XRP could experience a second surge in late summer or fall of 2025. He is respected in macroeconomic and cryptocurrency circles, having predicted Bitcoin's 2020 surge, driven by institutional adoption, and consistently uses macroeconomic liquidity cycles to frame cryptocurrency booms. Paul's thesis regarding Trump's economic policy is that it tends to lead to a short-term surge in the dollar, followed by a deliberate weakening. This weakening creates a favorable environment for speculative assets, especially cryptocurrencies, and he believes the 2025 cycle is playing out exactly like the 2017 one. Interestingly, this view is also shared by other macroeconomic analysts, such as Arthur Hayes, who noted that the combination of dollar weakness and fiscal expansion could propel cryptocurrencies into a parabolic surge. Another macro analyst, Lynn Alden, warned that the monetization of U.S. debt is bullish for Bitcoin and high beta altcoins. According to Raoul Pal, Bitcoin can make you a millionaire in the next 5 years. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Markets and economies have become perfectly cyclical, such that this extremely colorful. Many people, can't even probably see the summer thing, but these 4-year cycles and things like liquidity cycles. Obviously, that then means you get 4-year cycles in crypto and 4-year cycles in tech and just about everything else. And so the question is, okay, well, we're in the 3rd year of a 4-year traditional cycle, and you're going to say, and so if we look at those orange bars, be it fall. 2013 was a great year. 2017, that was the year Bitcoin did a 23x off the January lows. And you're like, all right, well, 2021.
In a market electrified by speculative enthusiasm, Bitcoin has reached a new high, surpassing $112,000 for the first time. The cryptocurrency's relentless rise, which propelled it as much as 3.1% to $112,009 in a single session, marks a new high in a year in which its value has increased by nearly 20%. This surge is not an isolated phenomenon. It is part of a broader rush toward risky assets in which tech companies like Nvidia have surpassed a record market capitalization of $4 trillion, and the S&P 500 is approaching its all-time high. Even as President Donald Trump's latest tariff threats ripple through global markets, Bitcoin traders are ignoring the angst, driven by a cocktail of institutional fervor and regulatory support. Bitcoin's rise is no fluke. It is a symptom of a radical shift in the financial landscape. For all its brilliance, Bitcoin's rise has been a balancing act. The same speculative fire that ignites record prices could easily escalate into a sell-off. Traders should remain vigilant for potential profit-taking or macroeconomic fluctuations that could trigger corrections, warns Vincent Liu, Chief Investment Officer at Kronos Research. The history of the cryptocurrency market is a graveyard of boom-bust cycles, and this rally is no exception to that volatility. Upon closer inspection, Bitcoin's break above $112,000 is more than just a headline. It's a milestone into a meteoric rise. Since Trump's presidential victory, the token has increased by around 60% from its October price, and ETF inflows have provided the necessary fuel. Industry experts consider this recovery to be more than just a breath of fresh air. Bitcoin's move above $112,000 reflects the cumulative effects of significant ETF inflows, growing institutional adoption, and a favorable macroeconomic backdrop, said Adam Gurin, founder and CIO of Hunting Hill Global Capital. With the return of rate cuts and increasing global political instability, investors are turning to tangible assets, and Bitcoin is benefiting from both gold-like positioning and risk-on dynamics. One thing is certain, Bitcoin has once again captured the imagination of the financial world. In a climate of tariffs, elections, and market frenzy, chaos may be cryptocurrency's best ally. The only constant, as always, is change, and Bitcoin rewrites the rules with each new boom. Paul highlights the potential of cryptocurrencies, particularly Bitcoin and Ethereum, as transformative wealth creation opportunities, citing their high returns and decentralized nature. We have about 6 years before everything changes, and we thought the money in the bank was safe. We thought our house was too, but none of that is true. As soon as you put your money in savings in the bank, you own nothing, and your future is making you 11% poorer each year. Cryptocurrencies like Bitcoin offer high-yield investment opportunities with growth rates significantly higher than traditional assets. Crypto offers a decentralized alternative to traditional banking and financial systems. Cryptocurrency investments allow people with modest capital to achieve substantial growth. Cryptocurrency investments democratize wealth creation, allowing people with limited initial capital to potentially achieve significant financial growth.